Imagine waking up to headlines screaming about Bitcoin's explosive growth, prices surging, big players diving in, and everyone around you talking about it. But here's the catch. You might already be part of this wild ride without even knowing it. Sounds crazy, right? Whether it's through your favorite app, a fund you invested in, or that sneaky ETF in your retirement plan, you could be buying Bitcoin every day. It's happening quietly, and it's reshaping the world of finance faster than most people can keep up. We're not just talking about tech geeks or Wall Street traders anymore. Bitcoin is breaking into mainstream investments in ways that are both exciting and, honestly, a bit mind-blowing. Think about it. While you're casually scrolling through your feeds, institutions are making moves, ETFs are gobbling up billions in Bitcoin, and supply is shrinking at a rate that's setting off alarm bells. But here's the kicker. Many folks are buying Bitcoin indirectly, completely unaware of the digital gold rush unfolding in front of them. This isn't just another crypto hype story. It's a financial revolution, and you're already in the game. The demand is outpacing supply. Big names are pushing prices higher, and countries are starting to look at Bitcoin as a safe haven in times of economic chaos. So, buckle up. Whether you're a seasoned investor or just someone trying to keep your money safe, it's time to understand why Bitcoin is exploding and why you might already be part of it. Let's dive into what's really going on behind the scenes. But first, subscribe to this channel and leave a like on this video. Bitcoin's recent price surge past $60,000 isn't just a random spike. It's a sign of a bigger movement. Institutional investors, like those behind BlackRock's IBIT ETF, have poured massive amounts of money into the market, seeing Bitcoin not just as a trend, but as a serious financial asset. It's almost like watching a new chapter in the history of money unfold, with the big players making their moves. For the everyday person, this is more than just numbers on a screen. It's an opportunity to understand how the financial landscape is changing. And while many still view Bitcoin as a speculative gamble, the institutions are treating it as the new gold. When BlackRock introduced its IBIT ETF, the market's response was explosive, driving prices higher than ever. ETFs make Bitcoin accessible in a more regulated way, which has attracted hesitant investors who prefer safer, familiar options. Imagine ETFs as a bridge that connects the traditional finance world to the fast-paced, high-reward Bitcoin environment. This has created a new wave of demand that's pushing the price skyward. For those not paying attention, this surge could seem sudden, but it's really the result of calculated moves by financial giants who see the long-term value. With this new influx of institutional money, Bitcoin's role in the financial ecosystem is becoming undeniable. The narrative has shifted from being a niche, risky investment to becoming an integral part of major portfolios worldwide. The impact? More demand, higher prices, and a sense of validation that Bitcoin is here to stay. But it doesn't stop here. The ripple effects are just beginning, leading us to the next crucial factor that's shaping the market: how ETFs are buying up Bitcoin at unprecedented levels. ETFs have become a game changer in the Bitcoin market, snapping up vast amounts of the digital currency like never before. In just 1 month, these funds purchased over 317,000 Bitcoins, worth a staggering $19 billion, a record-breaking move that's hard to ignore. This isn't just another buying spree. It's a deliberate strategy by institutional investors to secure their share of the future's digital gold. For everyday investors, it's like watching a heavyweight match where the big players are making their boldest moves yet, and the stakes are only getting higher. The sheer volume of Bitcoin being bought by ETFs has outpaced anything seen before, leaving a clear message: demand is skyrocketing. When you see billions of dollars flowing into Bitcoin through these funds, it's not just about speculation. It's a sign of institutional confidence. Imagine a tidal wave of capital washing over the market, pulling prices up and tightening supply. For someone sitting on the sidelines, this is a wake-up call. Bitcoin isn't just for tech enthusiasts anymore, it's mainstream, and ETFs are paving the way for more people to get involved. But why does this matter? Because ETFs are creating a supply squeeze like never before. With so much Bitcoin being pulled off the market by these funds, the balance between supply and demand is tilting heavily. This sets the stage for a domino effect. where each new ETF approval could send prices climbing even higher. And with such massive buying pressure, it's clear that we're on the cusp of something much bigger, a shift that's rewriting the rules of how digital assets are traded and valued. And speaking of supply and demand, the imbalance here is just getting started. The current Bitcoin market is experiencing a classic case of supply and demand imbalance that's pushing prices to new heights. On any given day, around 900 Bitcoins are mined and introduced into the market. But here's the twist. Recently, there have been days when up to 10,000 Bitcoins were bought in just 24 hours. Imagine trying to fill a cup with a fire hose. The demand is pouring in much faster than the supply can keep up. This squeeze is creating a perfect storm, driving prices higher as buyers scramble to get their hands on a limited resource. Think about it. The demand isn't just coming from individual investors looking to make a quick buck. It's from large institutions buying at volumes never seen before. The result? A dramatic tug-of-war where the supply of new Bitcoins is dwarfed by the massive buying appetite of the market. For anyone watching from the sidelines, this imbalance paints a clear picture. When demand outweighs supply to this extent, prices don't just rise, they soar. It's a powerful reminder that Bitcoin's scarcity isn't just theoretical, it's playing out right before our eyes. And this dynamic isn't slowing down anytime soon. Each day that buyers outpace miners, the market tightens further, making each Bitcoin that much more valuable. The ripple effect of this supply crunch is already being felt across the globe, with countries facing economic challenges turning to Bitcoin as a hedge against inflation and instability. This brings us to a bigger question. How is this playing out on the world stage, and what could it mean for nations grappling with their own economic realities? Around the world, the financial landscape is shifting, and Bitcoin is playing a starring role. In countries battling high inflation and economic instability, Bitcoin is not just an investment, it's a lifeline. People are turning to it as a hedge, a modern-day alternative to gold, pushing prices to all-time highs in these regions. It's a stark reminder that, for many, Bitcoin is more than a speculative asset. It's a tool for financial survival. Imagine seeing your savings lose value overnight. Bitcoin becomes that beacon of hope in a sea of economic uncertainty. This trend isn't just isolated to a few countries, it's a global movement gaining traction. Economists are predicting that more nations could soon follow suit, adopting Bitcoin as a store of value. The idea of Bitcoin replacing gold might have sounded like a wild fantasy years ago, but now it's becoming a tangible reality. Governments and individuals alike are waking up to the potential of digital assets as a means to protect wealth. And as more countries face economic headwinds, Bitcoin's role on the world stage is only set to grow. The implications are enormous. As nations embrace Bitcoin, it could fundamentally alter how global economies operate, challenging traditional notions of currency and wealth preservation. The world is watching, and the domino effect is real. Each adoption fuels the next, creating a wave that's hard to stop. But with this growing reliance on digital currencies comes new challenges, especially when glitches in major platforms can cause panic. Speaking of which, the next major twist in this unfolding story involves a recent scare that caught many off guard. Recently, a glitch on Coinbase caused a wave of panic as users logged in to find their portfolios showing zero balances. Imagine the shock, seeing your investments vanish in the blink of an eye. Although it was quickly identified as a technical error, the incident sent ripples of fear through the market, causing a temporary dip in Bitcoin's price. It was a stark reminder that even in a digital age, the security and proper custody of assets are paramount. The scare emphasized a key lesson. It's not just about owning Bitcoin, but ensuring it's stored safely. This glitch brought to light a broader issue that many investors overlook: the importance of custody in the crypto world. While platforms like Coinbase offer convenience, they also present risks when things go wrong. Think of it like keeping your valuables in a safe versus leaving them on the kitchen counter. Proper custody solutions like hardware wallets provide that extra layer of protection. For anyone serious about their Bitcoin investments, diversifying where you store your assets isn't just a good idea, it's essential. The incident with Coinbase served as a wake-up call for both new and seasoned investors alike, urging them to take custody into their own hands. The lesson here is clear. Technology is powerful, but it's not infallible. As the market grows, so do the challenges of keeping your investments secure. And while glitches may cause momentary dips, the bigger picture is unfolding as more influential companies, like MicroStrategy, continue to buy Bitcoin and shape the market narrative. Up next, let's dive into how one company's bold moves are rewriting the rules. MicroStrategy, under the leadership of Michael Saylor, has been on a relentless Bitcoin buying spree, turning the company into one of the largest corporate holders of the cryptocurrency. Saylor's vision is clear. He sees Bitcoin as the ultimate store of value, and he's not shy about putting his company's balance sheet behind it. MicroStrategy's bold moves have not only made headlines, but also inspired other companies to consider Bitcoin as a strategic asset. For many, this isn't just a business strategy, it's a masterclass in turning traditional finance on its head. What's truly fascinating is that MicroStrategy's aggressive accumulation of Bitcoin is positioning it for potential inclusion in the S&P 500. This is more than just a badge of honor. It's a gateway that could expose millions of investors to Bitcoin indirectly through index funds. Imagine having Bitcoin exposure without even buying it directly, just by holding a simple index fund that includes MicroStrategy. This opens up a new avenue for mainstream adoption, quietly integrating Bitcoin into traditional investment portfolios. Michael Saylor's strategy is reshaping the narrative around corporate investment and digital assets. By doubling down on Bitcoin, MicroStrategy is leading the charge and setting a precedent that other companies may soon follow. It's a bold move that speaks volumes about where the market could be heading. But as companies and individuals clamor for more Bitcoin, the looming question of scarcity becomes impossible to ignore. Speaking of which, let's explore why the limited supply of Bitcoin is creating a sense of urgency among investors. Bitcoin scarcity is one of its most powerful features, and it's a game changer in the world of finance. With only 21 million Bitcoins ever set to exist and a significant portion already lost forever, the supply is incredibly limited. Imagine trying to split a pie that keeps getting smaller. There's simply not enough to go around. If every millionaire in the world decided they wanted just one Bitcoin, the math wouldn't add up. This inherent scarcity is what drives value, making Bitcoin not just an asset, but a symbol of true digital scarcity. The concept is simple but profound. Bitcoin's limited supply contrasts sharply with traditional currencies that can be printed endlessly. This is why so many see Bitcoin as digital gold, only rarer. For anyone watching the market, it's easy to feel that sense of urgency. As demand rises and supply remains fixed, owning even a small fraction of a Bitcoin feels like holding a piece of the future. It's not just about having a digital coin. It's about owning a slice of a finite resource that's becoming increasingly out of reach. This scarcity narrative is more than just numbers. It's a driving force behind Bitcoin's explosive price movements. Each Bitcoin bought is one less available, tightening the grip on supply and pushing the value higher. For those who see Bitcoin as a store of value, the time to act feels more pressing than ever. As we look ahead, the future of Bitcoin seems almost predestined to keep climbing, especially with events on the horizon like the Bitcoin halving that will further restrict supply. Let's explore what's next as we peer into the predictions shaping Bitcoin's future. The future of Bitcoin looks increasingly bullish, with analysts predicting even higher prices driven by the relentless imbalance between supply and demand. With each passing day, the market faces a growing appetite for Bitcoin that far exceeds the number being mined. And then there's the Bitcoin halving event on the horizon, set to cut the reward for miners in half, effectively reducing the new supply. This built-in scarcity mechanism is like a ticking clock, pushing demand up as supply tightens, setting the stage for potential new all-time highs. For those not familiar, the Bitcoin halving happens roughly every 4 years and is designed to ensure that the supply remains limited over time. Each halving has historically been followed by significant price surges as the market adjusts to having fewer new Bitcoins entering circulation. It's like a constant reminder that Bitcoin's supply will never exceed its hard cap, making every fraction of a coin more valuable. Investors who understand this cycle often see the halvings as prime opportunities, anticipating that each event could propel the market to new heights. Looking ahead, the sentiment among many experts is clear. Bitcoin's best days are still in front of it. As the halving approaches, the anticipation builds, and the potential for price acceleration seems almost inevitable. But this isn't just about market speculation. It's about a deeper understanding of Bitcoin's unique economic model. The squeeze between supply and demand is only set to get tighter, leaving the question, how high can it really go? As we wrap up this journey through the current state of Bitcoin, let's pull everything together and explore what all this means for you. You've just taken a deep dive into the forces driving Bitcoin's explosive growth, and now it's time to ask yourself, are you ready to take advantage of this moment? The market is shifting, the rules are changing, and Bitcoin's scarcity is becoming more apparent with every passing day. If you're on the fence, consider this. How much longer can you afford to wait while others are seizing the opportunity? The world is moving towards digital assets, and staying informed is your first step towards making smarter decisions. Are you going to sit on the sidelines, or will you take the leap and explore what Bitcoin has to offer? The choice is yours, but the facts are clear. Demand is outpacing supply. Institutions are buying up every coin they can get their hands on, and future predictions point to even higher prices. What's stopping you from diving deeper, learning more, and maybe even taking action? Start small, educate yourself, and think about where you want to be when the next big surge happens. If this resonated with you, don't keep this knowledge to yourself. Hit that subscribe button, ring the notification bell, and join a community of people looking to stay ahead of the financial curve. Let's keep this conversation going. You're not just watching, you're becoming part of a movement. So, what's your next move?